In this video, we're going to look at Perficient, symbol PRFT, which could double over the next couple years. We can see it's had this pretty dramatic decline, was up near 150 and has lost more than 2/3 of that value, trading at 47.26 as of the April 30th close. And possibly part of this is due to the stock got pretty overvalued in here, and now we've moved into an undervalued territory here using a search engine that I use for stocks. We can see that it's trading near the bottom of its 5-year PE range. PE 17.1 based on last year's earnings, and about close to 16 for the trailing 12 months. Forward PE looking really attractive at 10. And you can see they've been growing earnings, 12% expected to grow over the next few years. And over the last 5 years, 28% growing earnings. You can see over here, this is their revenues, just steadily growing. Not every single year, but in an overall uptrend for more than a decade. And we can see the same thing with earnings per share. Haven't necessarily increased every year, but nice overall increases. And this is expected to continue. So this was 2023, $2.76 a share. And analysts projecting in 2024 up to $4 a share, into 2025 $4.54 a share. And what we look at is with this earnings, the PE low, below kind of in that 15 area, even if the stock can get back to a PE of about 20, which would be still pretty low based on historical norms. You can see it's often above 20, near the 25-30 area, often gets up even higher than that. But even if this PE were to move back to 20, you'd have a $90 share price if they can see these earnings. Even if these earnings weren't to materialize and they got maybe $3.50 per share multiplied by a 20 PE, again, we're a little bit undervalued right now. If we could move up to that 25 area, so at $3.50, that would put the share price at about $70, even if they were well off these targets that analysts have for them. So some pretty good upside potential for Perficient. The one thing to be aware of, though, is that of course the stock is falling right now. So big jump on April 30th. We'll talk about that. This is what kind of brought this to my attention. But still, there is some risk here that maybe they don't get these big earnings that analysts are expecting in the future. So something to be aware of. But one thing we want to check out is that the company is potentially looking for a buyer for the company. Buyouts generally occur at a premium, meaning the stock price is, or the offer price is higher than the current share price. Otherwise, companies aren't too interested in selling if that doesn't the case. So there is this, and this just came out on April 30th, Bloomberg posting that they were, potentially looking to see if there were some buyers out there interested in the company. So if they were to get some buyout interest, that could have a short-term upward effect on the stock. And then we also have this fundamental type thing in the background where the earnings could grow simply, or the stock could go up simply based on the stock returning to a more normal PE and just based on the growth that the company is seeing. So as always, do your own research. This is not a trade recommendation. I don't know your personal circumstances, but just something to check out.